Hello, superstars. Welcome back to LarryFx Academy, your number one spot for learning Forex the smart way. If you are coming across my video for the first time, my name is Samuel Akpelumi, the founder of LarryFx Academy. In today's lesson, we are moving deep into the concept of fair value gap. We are explaining what is fair value gap and how fair value gap forms and how to use fair value gap strategy to make money to the financial market. Now let's get to it. What is fair value gap? The fair value gap on our chart identifies an area where the fair price of an asset has recently changed. This change implies that when the price returns to the where the fair value gap had just formed, it will either rise if it is bullish fair value gap or fall if it is bearish fair value gap. This concept is similar to the supply and demand zone. For those that know supply and demand zone very well, it will be easy for them to understand what is fair value gap. Support and resistance level. If you understand support and resistance level also, it's easy for you to understand fair value gaps. Now, however, fair value gaps form faster, giving those traders, giving institutional traders the advantage to make money, to get a perfect entry for them. That is what I mean by this. Now, let me explain what is fair value gap using my charts. Like I said in my note, I said fair value gap is an area where price change. Right, fair value gap is the area on our chart where institutional traders come back to free before the proper buy. All right, it's an imbalance on our chart, or you call it inefficiency on our chart, where the institutional trader come back to that particular area and fill it forwards before proper move. And on this our chart, we have some gap, we have some areas. All right, now let me show you how fair value gap forms before I now explain how the area forms. Now, fair value gap consists of three candles. All right, it consists of three candles. If it is bullish candles, in our in trading we have bullish and bearish, we have range market, right? Now in this bullish, like we have order block and other bullish order block and breakout bearish order block, the same way we have it in fair value gap. Also we have bullish fair value gap and we also have bearish fair value gaps. Now for bullish fair value gap consists of three candles. All right, the first one will be a very strong bullish, right? It can be either it must have what upper shadow and lower shadow. All right, there's something we call in candlestick, there's something we call upper shadow, lower shadow. The upper shadow is the highest price of that candle of that market at that moment or at that time, right? The lower shadow is the lowest price where the price gets to that moment or at that time frame, right? I made a video on that already. If you are here to watch my video on candlestick, right, because you can't understand fair value gap without understanding the terminology behind candlestick formation, right? I've made a video on candlestick. You can go back and watch it. And don't forget to subscribe and share. All right. Now, the bullish fair value gap consists of three candles. All right. Now, the first one must has what we call upper shadow and lower shadow. The second one, the second one will have a what? A long body. All right. You can either have upper shadow and lower shadow. Now, the third one it can be either bullish or bearish. All right. But that third one must have it must have what we call lower shadow. All right. Now, how can you understand this? Let me show you what I mean in my chat here. Like, let me use this one as an example now. Now, this is what I'm trying to explain here. Now, this first one, you can see it has what we call upper shadow and upper shadow and lower shadow, right? This is the second body, right? This is the third candle. All right. Now, this third candle, yeah, it has small wick, which is the small lower shadow. All right. Now, the gap between the first high, all right, the first upper shadow, the first candlestick upper shadow, and the gap between the first upper shadow and the third candle lower shadow is what we call fair value gap. The gap between this first candle, all right, the high, and the third candle, the low, is what we call fair value gap. Sorry for that. Now it's what we call fair value gap. All right. Now let me show you another one. Can see after this market moves up, the market later come back to this fair value gap. Can you see it? We come back to this fair value gap before another proper move. All right. Now let me show you another one here. Now this for bearish fair value gap. This for bearish fair value gap. Now this is the perfect bearish fair value gap. Can you see the gap between this third one? This is 1, 2, 3. The gap between this first one and this third one is what we call fair value gap. All right. And let me use another one to do example so that you can understand better. Okay, this is another one for bullish fair value gap. This is another one for bullish fair value gap. Is it? Yeah. This one too is perfect now. See, this is the third candle now, right? This is the third candle. 1, 2, 3. All right. Now the first one, that's what upper shadow, right? And lower shadow. The second one, there's no upper shadow, but that's what there's no lower shadow, but it has upper shadow. Now the third one, it has what lower shadow. Now the gap between this first candle, the high of that first candle, and the low of that third candle is what you call fair value gap. All right. I hope you understand now. And you can see after this market moves up, come back a little bit before we take proper buy now. That's how to understand fair value gap. And now on our chart, we have some areas to identify as fair value gap area. And how can you do that? So that you don't miss an entry to get the perfect entry for you. Now, we have three types of fair value gap. We have volume fair value gap, right? We have candlestick fair value gap, and we have inverse fair value gap. All right. I identify it as three. All right. Now, the volume, I won't explain that now to be for another day. But let me deal with this imbalance in our chart for today. Now, some there's on in our chart there are some spaces that markets later come back to fill before the proper move. Right. This particular zone you can identify them as fair value gap zone. Right. And how can you understand them as fair value gap zone for a better confirmation? And also you have to understand what you call other blocks for you to understand fair value gap very well. You get now. So fair value gap is not a concept of you just looking at your charts and look at it, or you use the candlestick. It's beyond that, right? Now you have to understand how other blocks form, the area of other blocks. All right. So if I also made a video on that, you can go back and watch it so that you can understand better. Now there's an imbalance on our chart that the market later come back to fill. Now for this, I call them volume fair value gap. Now for this area, can you see for this now? Before the proper sell, right? Before the proper sell, market later come back to feed this zone before we have another proper sell now. So the market has been bearish from here, right? Reverse. Do you know the reason why the market reverse at this level? This is it here. Market reverse at this level. Come back like this. Can you see? So see. This zone here is a fair value gap zone that the market retests to. The reason why I call it fair value gap, let me tell you. The reason why I call it fair value gap. This is three candles. But two this are the candlestick formation. Because in candlestick formation we have something we call uh morning star, evening star, right, and co. Now I call this the candlestick formation for sell confirmation here. Now this 1, 2, 3 is the sell opportunity to sell. Now, regional traders let some space at this level. That is why they come back to fill this space before the proper sell. All right. Now, this level here, all right, and can you see the can you see this? But now we have this gap that must fill, all right, before the proper move. This zone, the head, the low of first candle and the high of third candle for bearish show is our fair value gap, right? Can you see the market come back? This is it. After the confirmation, the market did something like this, come back here and did what? I say here now. That's how to use fair value gap to make money trading financial market. Now let me show you for this is for bearish. Let me show you for bullish now. Let me show you for bullish. This is a bullish market here. Now for this we have 1, 2, 3. All right, the gap here. All right, you see this third candle, the first one, 1, 2, 3. See this first candle now, the head of that first candle, the high of that first candle, and the low of that third candle. Can you see after this price move up? And let's say it has been moving up from here, right? Did what? Come back and fill this gap for another buy. So that's how to understand the value gap concept. Now we have another one here. We have another one here that the market come back to fill before the proper move. This okay. Let's say this. Let me take this. Can you see? 1, 2, 3. Now the low of that third candle and the high of this first candle. Can you see the market come back to fill it? After moving up, the market come back what? Fill the fair value gap space, fill the imbalance. I see it moves from here, come back like this, right? Something like this. Now come back to this fair value gap before we have another proper move or buy. So at this level here, you should be looking for proper buy. So imagine you enter at this level. Imagine you enter at this level. Imagine the kind of profits you could have made. So that's how to understand what fair value gap. And let's go back to our notes. Let's go back to our notes. Now, how to identify a fair value gap? Fair value gap are three candles. Like I said, pattern. Identify a candle like this that is larger relative to the candles on its right, and I've explained this now. This is an example that I just break down for you. Now we have three candles here, 1, 2, 3. The first one, like I said, must ask what we call upper shadow, right? And the third one must ask what we call lower shadow. So the gap between this first candlestick high, and the third candlestick low is the gap, is the fair value gap. This is the bullish fair value gap. And for bearish candle, for bearish fair value gap, can you see still the same terminology, right? Just different direction. Bearish, bullish, right? Now this is sell, and this is buy, right? Now this is the valid fair value gap, right? Is the gap, is the valid fair value gap. This is what we call in volume fair value gap. When you have something like this, I will explain it in my next video. Right? Make sure you watch it and make sure you turn on your notification bell and subscribe, share, comment. All right. Now we have this as volume fair value gap. Right. Now that is that for that. Uh, this for bearish this for bearish. All right. So I don't want to make this video long, that everyone can watch it. All right. So in my next video, I'll be talking about uh valid impasse fair value gap and volume fair value gap. Turn on your notification bell so that you don't miss it. All right. And make sure you share. Like I said, make sure you share, like, and comment. All right. So thanks for watching. See you in my next video.